Hello, everyone, and welcome to the wrap up for the 9th of October 2020. Again, just quickly, if you guys are new here, this is one of the series on this channel. The rest of them will be starting up again soon, but this particular one, we use Trade Ideas and its backtester to come up with some stocks that we think have some good chance to run next week. We filter them down using, technical analysis and the trading eye of being a trader for 10 years to try to figure out what is what I believe is the top of that list. We have Trade Ideas and its auto trading robot trade them for us for the next week. We close them on Friday. Do it again. I report the performance. So this week, we'll start right away with the P&L, just because one thing triggered on this JCI. We were looking for a little breakout over this level. That's what we got. The rest of them didn't really move or just moved completely the other way as I was thinking, but before the trigger, so that's good. Netting in, let me bring this over. It was $97 per 100 shares traded at the end. Again, this is the yearly kind of P&L graph with 1, 2, 3, 4, or 500 shares traded. Year to date P&L graph. Apologies. So that was it for this week. And part of it is because the market's starting to feel like it's slowing down a bit. Now, we did get a nice kind of continuation from this base that we were talking about last week. It looks like the bounce is going to continue here. There's really no reason to call this, a bear market. Again, the whole time this was selling off, everywhere you looked on the mainstream media and all of this were saying, this is the end. It's going to roll over back to these lows. But kind of my theory is as long as they keep printing money as aggressively as they do, the market can kind of only go up, I guess, over the long run. And everything aside, that's just kind of the way I look at it from a fundamental point of view. But from a technical point of view, we are still just making higher lows here. So until this pattern of higher lows is broken, we're still technically in an uptrend. So this low right here would be kind of the main thing to watch around this 320 area. If that breaks, then we have technically changed trend then. So until then, just follow the trend. So what we're looking at this week, first of all, is IGMS. I kind of like that we had a breakout over this resistance area and then a pullback into this resistance area here. So it looks like we may bounce and continue higher. And with a 22% short float, that one's fairly interesting, right? We got this bounce and retracement kind of look here. BMRN looks like could possibly be a rounded bottom that's taking place here with a little bit of resistance here and here. So I'm going to look for this one, only 6% or so short float, but pharmaceutical companies. And the main thing I'm looking at is it happened right at this area. So it's respecting this support pretty well. And we put in this kind of W-type pattern. So again, we know right where we're wrong. If we get kind of into this area or if we break down the support, then, all bets are off there. From the short side, we're looking at CarMax for a potential bear flag. We had this down push here and then this sideways move. Looks like we could continue lower there. This 200-day moving average is in the way, but I think a short-term break of this could lead for some momentum to break there. And then at the very least, if we got down to the support area, that'd be a decent little trade. And last but not least, on CMCSA, you can see all this kind of resistance in this area here, and it's acting as resistance so far again. So if this uptrend line is broken here at this resistance area, I would take a short right here and then look to see if we can kind of at least get to the 200 period moving average, which would be somewhere near there. All right, so again, trying to keep these videos quick, but I'm going to I think I put a rant like the one I'm about to just make at the end of all these videos until at least the end of the election, which is, again, I'm Canadian, therefore apolitical about everything you guys got going on down there. So I'm only going to talk from a trading point of view, which is to say that I am, just worried about new traders and this volatility. Now, if we go back to the SPY, if you were trading all 2020 and you kind of survived this okay, then you probably know what's about to happen. And I would be willing to bet, whether or not the direction's up, down, or sideways, that the volatility is going to look a little bit more like this. So that being said, what do you do? Right? And my suggestion is always the same. When volatility decreases, you do two things. You decrease your share size and you decrease your time horizon. So if, for example, you are a trader like me, who a swing trade generally will be a week or two, you may want to shrink that down so your swing trades are 2 to 3 days, right? You're looking for a break of a base or whatever setup you're looking for, and then a couple days later, you're already taking the majority of your profits. Same as if you're a day trader and your day trading general hold time is an hour. Maybe it's time to look to shrink that to about 15 minutes. It's what's going to happen is you're going to have the same amount of profit and the same amount of loss. Everything is just going to happen quicker. So again, your stop metrics, if you're using any sort of automated system or even just a system that you've come up with, and your stop is something like, I'm going to risk 25 cents or 5%, go on my channel, search relativity. I did a whole video about why both of those things don't make sense and how you need something that adapts to changing volatility in the market. So please look that up. I think that will help you through this. And again, trade smaller and then shorten your time horizon. This particular series will obviously be on hold for whatever week. I got to look up the election is. We won't be picking stocks the week before that. And depending on what happens kind of throughout there, we will wait until everything is decided and the market is kind of calmed down before we initiate trades. And for my own trading, that will be the same thing. I will be 100% in cash going into the election. And then from there, I will be focusing on short-term trades. There's nothing wrong with, pulling out and maybe being a day trader again for the next month or a couple weeks. But overnight holds, I think, are going to be riskier in this higher volatility environment. And it's the same with any event, whether it's an election or a major vote or a war, or a conflict, or whatever it is. When you see volatility spike, that's my recommendation. Take your share size, shrink it, because your stops are going to get larger. If your stops don't automatically get larger, then you need to go reassess your stop loss protocol. And then at the same time, understand that whatever move you're looking for is going to happen quicker. You're going to enter the trade, you're either going to get stopped out right away or you're going to make money right away. This is not to scare you, because both of these scenarios, from my point of view as a trader, it's a good thing. If I'm looking for a stock to move, let's use an example from this week, right? So if I'm looking for IGMS to bounce off this area and kind of retest up here, right? If that's going to happen in a day, that's obviously going to be better for me than if that happens in a week. It just means I can sell that position, recycle that capital into the next position. So these are good things. Increased volatility is good for a trader, and you have to experience that. But at the same time, you have to have a game plan going in. Now, for you more systematic guys, what I would take a look at is the VXX and just come up with levels and say, okay, if the VXX is in this price range, then I will do this, which is I will shrink my time horizon to this, or I will change my stop loss to this. And then if the VIX is in this area, then I will do this, right? Come up with hard and fast rules if you're that kind of guy. If you're more of a discretionary trader, again, just know that there's going to be all kinds of wildness and news coming out and different events, and this guy said this and this person said this and this thing's crazy, and each of those is going to swing the markets, because a lot of the professional traders, a lot of the funds and the institutions, the guys who cannot be as mobile as we can. So for example, large mutual funds and hedge funds sometimes have mandates in which they cannot go to cash, right? So they have to be in positions. They don't have the luxury that we do, where we can sell our positions and then reload after an event occurs. These guys are going to be stopping trading. They're not going to be in and out trading like we are. And when they stop, it increases volatility even more, because what happens is that kind of liquidity or force that pushes the market in one direction or the other is gone. So a lot more whippy moves happens and things like this. So again, just shorten your time horizon, lower your position size, make sure your stops are being adaptive to what's happening in the current market and they're not just a percentage or a dollar amount or something trivial like that. And you can check out the video on the channel that talks all about that. All right, so that's enough rant. I will try to do shorter rants, but I'm going to do one each week just so that people know that, you know, this is coming and it's going to affect your trading and you have to come up with a plan for it. Again, my plan is always to sidestep and just go shorter term and be a sniper for a little bit. So, all right, guys, trade safe out there.